the Feds probably won't cut interest rates just yet, but its next move is expected to be good for Americans. JPMorgan stocks are slipping, and Biden makes serious artificial intelligence regulation moves. These are the top 3 headlines in this week's weekly business brief. First up, the year is coming to a close, and it looks like the Federal Reserve's war against inflation is finally easing up. According to the Business Insider, on Wednesday, the Fed Open Market Committee is expected to announce its next interest rate decision, and a hike probably isn't in the cards. The CME Fed Watch tool, which analyzes various derivative prices to estimate possibilities for interest rate changes, predict a 98% chance the Fed will continue to pause rate hikes, with a 2% chance it'll cut rates as of Monday afternoon. In September, the Fed's paused interest rate hikes as it continued to receive promising data on the country's economic recovery. Since then, the good news has continued. The U.S. added 336,000 jobs in September, and the Consumer Price Index, which measures inflation, grew 3.7% year over year in the same month, holding steady from August and well below its high point last year. Fed Chair Jay Powell said during the September press conference that as the central bank continues its mission of reaching its 2% inflation target, we are fairly close to where we need to get to. We need to get to a place where the confidence that we have a stance that will bring inflation down to 2% over time, Powell said. That's what we need to get to. We've been moving toward it. As we've gotten closer to it, we've slowed the pace at which we've moved. I think that was appropriate. And now that we're getting closer, we have the ability to proceed carefully. I think that they know that they're really close to breaking something in the economy. I think they've pushed the rates high enough already, and they know something is going to break at these rates. But we'll have to wait and see. It is a good sign that they are slowing down on these interest rate hikes. I hope that next year, sometime, they start easing up and bringing the rates down a little bit. I know there are many that say, hey, we need to hold for longer. It's good for the economy. It's going to be very painful for many, many Americans with credit cards, rates going up. Many of you already experiencing your monthly payments going through the roof as credit card debt is not fixed debt, and those interest rates are variable. We're also seeing student loans. They started coming due in October. And one last thing that's coming up is as of November 1st, the COVID foreclosure moratoriums are finally lifted and banks can start foreclosing. So with all of that being said, possibly the reason the Feds are not being so hawkish anymore on raising interest rates is because of all of the circumstances around the economy. Next up, JPMorgan Chase stock slip after bank says CEO Jamie Dimon is selling 1 million shares, reported CNBC. JPMorgan Chase CEO Jamie Dimon will begin to sell 1 million shares of the bank he runs next year, the company said Friday in a filing. The plan sparked concern that Dimon, 67, could be contemplating retirement. Dimon is arguably the country's top banker. He has led JPMorgan since 2005, helping build it into the biggest and most profitable American bank. His stewardship included navigating JPMorgan through 2 banking crises, helping stabilize the industry by acquiring failed banks. Before now, Dimon has never sold shares of JPMorgan except for technical reasons such as exercising options. He has also spent his own money snapping up JPMorgan shares in the past. Shares of the bank slipped 3.6%, worse than 2.3% decline of KBW Bank Index. This is a reminder that the CEO is getting closer to retirement, Wells Fargo analyst Mike Mayo said in a note. Dimon may transition from his current role in about 3.5 years if prior statements prove accurate, Mayo added. A spokesperson for the New York-based bank said the move wasn't related to a succession planning and that Dimon has no current plans for another sale, though his needs could change over time. I don't know, guys. When it comes to bankers and the banking industry, they have a track record of not being a trustworthy industry. I'm not saying that Jamie Dimon isn't trustworthy. I'm just saying that if Jamie Dimon is selling 1 million shares of his own bank that he works for, yes, there is the possibility exists that he is planning on retirement. However, the possibility also exists that he knows something that the rest of us don't know, and he's starting to bail out. But I guess we'll see. The future will tell us, and we'll be able to look back and see which one is it. Lastly, Biden issues U.S. first artificial intelligence executive order. According to Al Jazeera, to realize the promise of AI and avoid the risk, we need to govern this technology, said Biden on Thursday. In the wrong hands, AI can make it easier for hackers to exploit vulnerabilities in the software that makes our society run. The executive order includes a provision that developers of the most powerful AI models must notify the government of their work and share safety test results. It also calls on the National Institute of Standards and Technology to establish rigorous standards for testing AI prior to its release. The Department of Commerce to develop guidelines for identifying AI-generated content, and agencies funding life science projects to establish strong new standards of biological synthesis screening to ensure AI cannot engineer biohazards. Biden also called on Congress to pass data privacy legislation and for the Department of Justice to address algorithmic discrimination among landlords and federal benefit programs. White House Deputy Chief of Staff Bruce Reed hailed the measure as the strongest set of actions any government in the world has ever taken on AI safety, security, and trust, and the next step in aggressive strategy to do everything on all fronts to harness the benefits of AI and mitigate the risk. I personally think that this is a good thing. AI could turn into something wild if it's not regulated. However, the other side to that is that we know that a lot of times where the government puts their hands in, they tend to hurt innovation. So we'll see where this one goes. I think this is good. I think AI needs some sort of regulation, just like I also believe that the social media companies need some sort of regulation and what they allow and what they don't allow. So this is a very complex subject to navigate, and we'll see where this goes. And let me know, what do you think? Do you think these laws can actually regulate AI? Share your thoughts down in the comments below and let's discuss. And this has been your weekly business brief. I'll see you guys next week. And remember to like and subscribe to the channel to keep up with the latest business updates. Peace.